Us. I think Giri is still waiting by. Giri, thanks for waiting. So you completed that point on autos. I was coming to you on retail and whether this is a good time to buy any of these beaten down names there. and secondly, and briefly, Giri, if you can run us through your estimates, earnings estimates now, which way they're trending. Are they stable now? And do you foresee risks post this quarter's earnings? Go on.
Firstly, on retail, we have a fairly detailed report on the sector. We've initiated on a number of names. The ones we like in that are Manyavar, and the other names are a little bit more expensive. Trent has always been expensive but looks good all the time. The sector will see some impact of the slowdown. Discretionary spending seems to normally take the hit. But these are all companies that are growing fast, so the growth might mask the slowdown a little bit. And as far as the earnings are concerned, we are at this point with nifty earnings for FY24 929 and FY25 1064. They have come up a little bit. We think the downgrade cycle in earnings has not really begun yet. We'll see one more quarter of downgrades like we saw in 3Q on all discretionary names, but it won't become very widespread in this quarter. In this quarter, actually, many companies might report raw material price improvements, and that will take some of the impact of downgrades off. But in 1Q, 2Q, we'll see some problems.
Giri, fair enough. But you're saying that earnings downgrade cycle has not begun yet. That's what you're saying, broadly.
Yeah, it is not begun in right earnest. When it happens globally, then we'll talk it here also.
Okay. Just one last sector is real estate. Just want to get your thoughts. Which is the best name to own there?
See, we recently upgraded DLF and brought it to our top picks. Now that's run up a little bit. Let's see if it corrects. We like Brigade as the other name. That is a little bit illiquid among the best companies that you can find in that sector. We like the listed real estate space for many reasons. We've been saying for a long time that interest rates would be cut much sooner than the market thought. At that time, the market was expecting rates to be cut only in 2024 calendar in the US. Now the market thinks that it will be much sooner than that, which agrees with our view, which we've held for the last 7-8 months. And that actually is a tailwind for real estate. The other thing is that if you look at data for India historically, whenever interest rates are low and the economy is a little bit weak, industrial capex doesn't do very well. Investment in industrial capex suffers in terms of its growth rate, but real estate holds up because the interest rates are low and it's more sensitive to that. So that's what I think will play out here. Housing as a sector will do relatively well. Not affordable housing so much. The government didn't push it so much, but listed real estate will do well. Monetary conditions are tight, so the second-tier listed real estate developers will find the going tough. There'll be a market share shift to the big listed players. So that's also a tailwind. And DLF has generally, over the years, cleaned up its act. Brigade is already a very good company. These two companies we like.
Okay, all right. Stay on. We'll come back to you. I have, a couple of more questions on private sector banking because there's, of course, ICICI Bank that comes out with numbers tomorrow. So all eyes will be on that. But we'll just take a quick commercial break and come back with more. Mitesh Thakkar and Shrikant Chauhan will be joining in for some technical trades. Stay tuned.